Hello and welcome everyone. Today we will discuss a simple question on cash flow estimation. So here's the question. A company desires to make an investment of rupees 2 lakhs in a new machinery. Installation and transportation cost is rupees 30,000. The machine has a life of 5 years, after which it is expected to fetch rupees 40,000 as a scrap value. The machine is expected to generate an output of 2,500 units per annum in the first 2 years and 3,500 units per annum for the next 3 years. The product is expected to fetch rupees 25 per unit in the first 3 years and rupees 28 per unit in the last 2 years. The cost of operating the machine is expected to be rupees 7,000 annually for the first 3 years and rupees 9,000 annually thereafter. That is for fourth and fifth year. Calculate cash flow after tax, also known as CFATs, for the above proposal on the assumption of straight line method. So you may also get a question on WDV of depreciation and tax rate is 40%. So with all this information given to us, we need to calculate the cash flow after taxes. So the first thing, the working note will be calculation of the depreciation amount. So we know that cost of machinery is 2 lakh. If we add transportation and installation cost to it, that is 30,000, we will get 2,30,000 as the total cost of the machinery before subtracting the scrap value. If we subtract the scrap value of 40,000, we will get the total cost of machinery, that is the value to be depreciated, that is 1,90,000. So annual depreciation will be 1,90,000 divided by 5. So this will give you 38,000. So with this formula, you may calculate it. That is 1,90,000 as cell referencing divided by 5. Now, this was the first important step of this question. The next is, we have been given the information regarding the years and certain particulars. So particular and years, we will make a table. We know that output is 2,500 units for first 3 years and then 3,500 for next 2 years. Price is 25 rupees per unit for first 3 years and then 28 per unit for fourth and fifth year. Therefore, by this we get the revenue of how much? Output into price, that is 62,500. You can use the formula by using the cell referencing. So I have multiplied the contents in C21 with the contents in C22 or the number in C22, and we get this as the answer. And if you just calculate one, you just need to drag and you will get the other values. Then operating expenses is 7,000 for the, I think it was 7,000 annually for the first 3 years, and then 9,000, we need to change it. So it is 9,000 for the fourth and fifth year, right? So you may also drag it down. So we just need to, I have included the negative sign so that we can directly subtract it. Then depreciation is also subtracted in order to get profit before tax. So 38,000, we have taken cell referencing from here. So you can type it also, or you may take the cell referencing, and I have included a negative sign in order to keep it as a negative item here so that we can subtract it and get the profit before tax. So you just need to sum these up and you will get the profit before tax. Basically 62,500, that is a revenue, minus the operating expenses minus depreciation, will give you profit before tax as this, right? So here this will be the amount. Then tax is at the rate of 40%. It is given to us in the question. So here we have calculated our tax. So the formula can be 0.4, that is 40% into the profit before tax value. No need to fix the cell. We will drag it. And I have inserted a negative sign so that we can subtract it easily. So just use this formula and drag it further in order to get the tax for all the years. And then profit after tax will be 17,500 minus 7,000. So you can sum them up also by using the sum function and you will get the subtracted amount. Then depreciation. Now, in for the cash, in order to calculate the cash flows after taxes, we need to add back the depreciation amount because depreciation is a non-cash expense. So we can't include that. So we will add it back. So therefore, 38,000, that the amount we calculated earlier, is added back, and also the scrap value. And even if there was certain working capital which was released, we will also add back that also in the terminal year, the final year. So scrap value, that the amount we will be receiving after we sell this asset, we will be adding that in the final year, that is the terminal year. So here we have added the 40,000 also. So CF80 will be calculated as this. So for all the 4 years, it will be profit after tax plus depreciation. And for the fifth year, it will be profit after tax plus depreciation plus scrap value. Even if there were in the question, there was some information regarding the working capital release, that should also be added back in the terminal year, or we can say in this question, the fifth year. But this is what we have in this question. So this is how we have calculated the CF80s based on the given information. So I hope you understood the question. Thank you so much for watching.